Hello, welcome back to this week's market update. Today is Monday, April 27th, 2026, and we'll jump right in. Looking at last week's market performance, growth stocks continued their climb as the S&P 500 and Nasdaq Composite hit new all-time highs. The Nasdaq Composite gained 1.5% last week, followed by the S&P 500 up over 0.5% in the last week, while the Dow Jones Industrial Average lagged down 0.4% last week, with investor focus now shifting to a very pivotal week ahead, featuring big tech earnings, major economic data releases, and the April Federal Reserve meeting. Moving into some economic data from last week, retail sales rose more than expected in the month of March, rising 1.7% in just the single month. Most of the increase was driven by higher energy prices as gas station sales surged more than 15% in the month and were up 18% from a year ago. Excluding gas station sales, retail sales were up a much more modest 0.6% in March, up 2.9% from a year ago. And we'll take a look at some of the categories driving this month's data in the next slide. As I mentioned, gasoline sales were the primary contributor, up more than 15% in a single month. Other categories, though, were mixed. So we had motor vehicle sales actually down about 2% from a year ago. Furniture sales also down 0.8% from a year ago. On the bright side, though, we had clothing sales up 7.2% from a year ago. Building material sales also up. Electronic sales also up. Grocery sales were about flat from a year ago. So a lot of mixed data when you look further into the categories of retail sales, but overall it was a fairly strong month for March, mostly driven by higher gasoline prices. Looking more broadly at economic and recession indicators here, overall the outlook remains fairly positive, though a little bit more cautious than maybe a month ago, as some of these indicators that were previously neutral have flipped to be bearish. Going down the list, we have the ADS index that is currently a bearish signal, although with this coming out weekly, it does often kind of gyrate between bullish and bearish. The ISM manufacturing and services indexes are both above 50, which is a bullish sign for economic growth. Services being especially important because services make up such a large portion of the US GDP. The LEI, the leading economic indicators index, that is neutral currently. It is still trending lower, although the rate of change has improved, which has made it a more neutral signal. The Philly Fed's manufacturing business outlook survey, that has been bullish in the past month. The employment trends index, that has flipped to be a bearish signal currently. A lot of this coming from lower hiring during a lot of geopolitical uncertainty. We also had the Chicago Fed National Activity Index come out for the month of March. It showed a pretty sharp decline in the month, largely due to a pullback in production and income, which is this larger red portion of the breakdown there. Last but not least, the Anxious Index, which is a survey of professional forecasters' probabilities of real GDP declining in the next quarter, that has flipped last month to a more bullish sign. So overall, we still have a moderately positive outlook based on these indicators, but it has become a little bit more tame compared to a month ago. Supporting this positive economic outlook, initial jobless claims have trended lower in recent months, with the latest reading for the week ending April 18th coming in at 214,000, slightly above the prior week, but at a still relatively low and healthy level. The 4-week moving average came in slightly higher at 210,750, but again, still well below this September peak at 259,000 jobless claims. And the unemployment rate continues to also reinforce the stability, holding in the low 4% range. Wrapping it up here, last week was a bit slower on the economic data front, but that is not the case for the week ahead. So we'll be having the April Federal Reserve meeting midweek here. We'll also be getting the first quarter GDP initial estimate, PCE inflation, consumer confidence, and a slew of other economic data points this week, as well as a lot of earnings catalysts. So we'll have Verizon reporting today, Visa, Coca-Cola tomorrow, Alphabet, Microsoft, Amazon, Meta, Apple, all reporting in a 48-hour period between Wednesday and Thursday, as well as Eli Lilly on Thursday as well. Then Friday, we'll close out the week with Berkshire Hathaway and some energy giants, and that'll give us a glimpse into how higher commodity prices are starting to flow through in earnings. So that concludes this week's market update. It was a bit of a quieter week last week, but we have a lot of key catalysts in the week ahead. We'll be sure to keep you updated, and we really appreciate you tuning in. We'll see you next week. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.